So good afternoon, ladies and gentlemen, and thank you very much for attending our session. I believe we are one of the last panels that divide us between you and your tasty lunch, so thank you very much. We want to thank also the organizer, Capital Link Forum, and specifically Nicholas Bornozis and his team for assembling such a fine panel and inviting such a fine audience. Today we're going to talk about modern trends in insurance, and we are very fortunate to have with us Joe Hughes, who is the chairman and CEO of the managing company of the American Club, the only P&I club based in New York with offices all over the world, recently Houston, London, Piraeus, and Shanghai and Hong Kong. Mr. Hughes also oversees Eagle Ocean Agencies, which is an affiliate of SEB Inc., the managing company of the American Club, which operates Eagle Ocean Marine and Eagle Ocean American insurance facilities, and the latter is a cover holder for Underwriter at Lloyd's. He also serves on the board of the American Hellenic Insurance Company and Cyprus-based underwriting investment of the American Club. Mr. Hughes has graduated from Oxford University, and he was called to the Bar of England and Wales, where he practiced in the area of commercial law, and then he transitioned to the insurance world, working for two major IG P&I clubs in London and in Norway. He was also chairman of the global marine practice for, I believe, 6 years at Jardine Insurance Brokers, the leading Lloyd's broker in London. Mr. Hughes is an impressive man, and he has numerous affiliation, and he's chairman of NAMEPA and serves of the board of NYMAR and the Port of New York and New Jersey. He's a member of the National Cargo Bureau, and last but not least, he was listed top 10, one of the 100 marine insurance personalities of the year by Lloyd's List. Molly McCafferty is a woman who does not need an introduction in the insurance world as well. And today we are specifically, we extend a big thank you to her because you all saw her on the arbitration panel, and he agreed to participate with our panel. She's a senior manager in claims and insurance at Clipper Boak USA, a large operator with over 100 boat-sized vessels. Molly has an expertise in charter party disputes, complex casualties, cargo and personal injury disputes. He's previously worked for Thomas Miller, and he also has practiced for numerous years in a law firm in Miami. Miss Molly serves on the board of serves on the board of CMA Education Foundation and the board of governors of SMA. Today we are very fortunate to have with us the VP of a broker, who is Chris Maro, who is a VP at the major broker firm JOT. Mr. Maro has an impressive seagoing experience on U.S. government-operated vessels and small tankers, and he transitioned into marine insurance work, working for a major publicly traded brokerage house for 11 years. He's currently responsible for business development and complex insurance programs for U.S. blue water vessels and fleets. He is a graduate of State University of New York Maritime College with a Bachelor of Science in Marine Transportation and Business Management. And last but not least, we have today Gregory O'Neill, who is the executive partner of Hill, Betts & Nash in New York, a law firm that I'm very fond of because I practiced there for 7 years. Greg is a trial lawyer with an impeccable trial reputation and most 100 defense verdict, and has represented major ship owners in class action disputes, and his work speaks for himself. So today our panel will speak from an insurance perspective, New York American Club, owner's perspective, broker's perspective, and the lawyer's perspective on the insurance trends. So I'll give the floor to Joe.
Well, thank you very much indeed, Boriana, and thank you for that particularly lengthy and rather splendid encomium.
I
just
cut
as
it in
well,
half.
thank you. We are colleagues, as some of you may know, actually, so I suppose that was inevitable. Can you hear me, incidentally? Is that working? Yes. I intend to give a very, very brief overview of two sectors of marine insurance in particular, being the hull insurance sector, that is to say the insurance that pertains to the property in ships, and the P&I sector, which is that cover providing insurance for the third-party liabilities arising out of the operation of ships. The American club actually is represented in both spheres these days. Obviously, the club itself, which celebrates its centennial next year, as a member of the international group of P&I clubs, insures a very broad range of international shipping for those third-party protection and indemnity risks. And most recently, we established, by way of an investment, a new company called American Hellenic Hull, which is based under the Solvency II regime in the European Union in Cyprus. In fact, we held our inaugural board meeting there in Limassol only last week. So we see these related businesses really from an American club perspective these days in a rather singular way. Put at its simplest, I suppose, you could say that hull and P&I marine insurance, or the circumstances of hull and P&I marine insurance, might be expressed in a single sentence: there's no money in it. Which means effectively that rating levels for both those areas of cover are at secular lows. They're at secular lows for slightly different reasons, however. The commonality between the two is that claims levels over the last several years for both hull and P&I have been relatively benign. And of course that in itself is a good thing because it supports some of the rating levels that we've seen in recent years in both areas. Turning to hull specifically, hull levels of rating are to a large degree driven by the significant amount of capital that has come into the hull markets in particular over recent years, new capacity that is effectively seeking yield from the insurance sector, finding it very difficult to find yield in other areas of investment. The P&I sector is driven by slightly different factors, one of which, of course, most importantly, is the fact that P&I clubs are ultimately owned by their ship owner members, and they have boards of directors that represent those ship owners and therefore have a considerable influence, a dominant influence, of course, on the rating practices and procedures of the clubs themselves. And in the teeth of a very difficult shipping environment, very difficult freight markets, the clubs have been able to respond by virtue of this mutual principle, by virtue of their ultimate control by the ship owners, in keeping rates to the very minimum required in order to provide the insurance from year to year. And I think that has been a particular feature of the P&I markets as such. Another issue, I think, that is relevant to both areas is the increasing regionalization of the businesses. Here in New York, obviously, we have both a P&I and a hull presence. The traditional hull presences in London and Scandinavia remain robust, obviously. But I think in Asia in particular, there has been growth in recent years of capacity for the placement of hull risks, to a more limited degree P&I risks in that area. And I think that looking to the future, the elements of regionalization that we've seen to date are likely to continue. So, in summary, therefore, from the insurance provider's perspective, low rating, but happily relatively low claims, increased capacity coming into the hull sector, the response of the P&I club specifically to the difficulties which face the freight markets in general, and growing regionalization of the business. Thank you.
Mr. Hughes, there is often talk within the P&I market about club mergers. What are your views on this subject?
There's been talk in the P&I market about club mergers for the last 40 years, which I'm sorry to say is a length of time I've actually been engaged in this business. It'll be 40 years next April. And they have happened from time to time, but usually in the context of a particular club being in great distress and therefore needing the support of either other clubs in the international group or simply going into runoff if they weren't part of the group. The Sunderland Club in 1989 was merged into the UK club. In 1999, the Newcastle was merged into the North of England, and in 2000, the Liverpool and London Club ceased underwriting. Those were group clubs who were in effect picked up by other clubs within the international group, but only in circumstances of the distress they faced at the time. There have been other failures, the Oceanus back in 1983-84, Ocean Marine, these were non-group clubs, and they simply went, more recently the south of England about 5 or 6 years ago, these non-group clubs simply went into runoff. The fact that the international group is designed as it is for those clubs who remain viable, I think, tends to preclude the need to have mergers, quite frankly. I'm sure many of you are aware of the fact that the Britannia and UK clubs sought merger, which was announced originally, probably just before the end of last year, but they failed to achieve that merger. Me. My goodness, what a Freudian slip that was. They failed to achieve that merger simply because their boards of directors ultimately, I suspect, didn't see the particular advantage that would apply to their clubs by simply merging it into one behemoth club. So I think that the number of clubs in the group, the way that they operate, the manner that they have in providing differentiation among themselves, different segments of the shipping market, which is itself highly fragmented, tends to militate against natural tendencies towards merger, because that's the way the existing arrangements are the way in which the ship-owning community ultimately wants things. That's not to say that mergers might not take place in the future, but they're less likely to take place, I suggest, than a lot of commentators would have us believe that they will.
How do you see the home market developing in the next 5 years?
I think that it'll remain well, a lot depends, I suspect, on the level of, and this may seem to be a bit of a disconnect, on the level of very considerable catastrophe claims over the years to come. Because a lot of the capacity that's been coming into the hull sector and the insurance industry at large has been predicated upon gaining yield in the context of benign claims results. And there has, over the last several years, and if you look at the reports of Lloyd's of London, for example, recently, there has been a remarkable favorability, if you will, of those kinds of claims coming into the industry, and that has encouraged more of this capital to move into the insurance space. If there were a series of large claims that damaged the profitability of that money coming into the insurance space, then I think you would find that rates would inevitably rise. A lot of that capital would remove itself, rates would rise, and the overall rating background of the industry would probably improve substantially. If that doesn't happen, then I think probably because there is an excess of capital in the world in general and the interest rates are low across all sectors, I think that things will probably remain the same, but it's ultimately a feature of how claims are likely to develop over the next several years.
Molly, would you make a comment from the owner's perspective?
Sure. From the owner's perspective, the first thing to keep in mind is, and I'm on the bulk side, the market sucks. No other way to say it. It has probably since 2008. And in this market, money matters. So historically, when you're looking at clubs and making decisions on insurance, relationships probably played a more important role. I think owners now have to look at the bottom line much more closely, and those rates they're getting really do make a difference. In addition to that, the two other things that are important are that partnership that you want. So the relationship does still come into play, but at the end of the day, the bottom line is what's going to make the difference. And the third thing we look for is that network. The clubs have been very successful in spreading their wings throughout the entire world. So when Clipper has a problem in Guyana or South America or, in Africa, I know that I can reach out to whoever that provider is and get the assistance that I need. So from an owner's perspective, in terms of what they're looking for from insurance, right now, those are the big three things: money, the partnership, and the network.
Thank you very much, Molly. And I have a question to Chris now. From an insurance buyer's perspective, what changes has the marketplace seen over the last 10 years?
Well, I think focusing over the past decade, I think the glaring change is the need for underwriting results to be corrected. 10 years ago, there may have been sort of a drive to sort of lean on investment incomes to sort of prop up the numbers. And unfortunately, in 2006, 7, and 8, you saw that sort of the bottom fall out, especially on the P&I club side. And today, I think there's this push to see the underwriting results come in line to be more flat, if not better, although it's a struggle because, as Joe said, you're not going to make any money in today's market on the underwriting side. So how are you going to alleviate that pain of managing and focusing on the underwriting results? It's through diversification. So you're seeing now syndicates popping up in London, syndicates coming over here into the US. You're seeing P&I clubs now enter into sort of Lloyd's facility, the fixed market itself. Competition breeds rate reductions, so all this new capacity that's coming into the marketplace, whereas you didn't see as much 10 years ago, it's all driving rates down. So coupled with that is this diversification process. On the flip side, you're seeing sort of these mergers and consolidations from the marketplace. So the XL Catlins merge, the Ace Chubbs merger, even the P&I clubs. Thomas Miller's investment into Osprey Underwriting, the American Club. There's this need to spread the risk out beyond sort of that monoline area. On the claims front, I think Joe touched on that very well. You're seeing sort of severity, not frequency. So that trend, the costs are still there, but they're not recognized as the way they were 10 years ago. Reinsurance rates are being driven down. So again, it's coming from sort of the top down. And then on the business side of the owner's side, new capacity, new tonnage, it's that churn effect. So sort of the older tonnage that was on the water attracting heavier rates. Newer rates are being introduced to newer tonnage. The P&I club system is probably the best system out there in the insurance market right now. They provide, as Molly mentioned, a worldwide network. And I think today that will always hold true to the owners. However, given sort of the market on the owner's side, that will be tested and put under the microscope, given that every dollar counts. From a broker's standpoint, it's taking this sort of idea of managing the owner's money wisely and saying, how best are we going to increase operating income and give the owners that increase in their earnings per share, so to speak. And that falls down to insurance today, just because of the way the market is and how struggling times our owners are seeing.
Thank you, Chris. And what, if any, lessons has the market learned over the last 10 years?
I think the biggest lesson is that service is key. So if you're not going to get it, so to speak, in pricing, it's going to come out in service and prove your worth. That network, okay, if we focus on sort of the P&I club system, is so vital. Where are you going to get an underwriting model, claim support, legal support, local correspondence to show up at the drop of a hat to provide the owner with sort of an all-encompassing product. That is of itself the best that's out there. Having said that, the market is suffering on the owner's side, and there has to be sort of this entrepreneurial flavor to provide alternative means to reduce that cost to owners.
Well, thank you very much. This is a perfect transition talking about service and transfer it to Greg O'Neill, which does servicing of our members and members of major P&I clubs in his career. So I'll give the floor to Greg to comment from the lawyer's perspective.
Is this working? Good. It was dead 10 minutes ago. Okay. Thank you, Boriana, and thank you, ladies and gentlemen. I'm honored to have been asked to be on this panel and to provide a lawyer's perspective for marine insurance. As I was introduced, I'm a P&I lawyer. I do defense. I work with P&I clubs and owners. And I had to ask Boriana when she asked me to be on this panel, I said, you know, as an attorney, I don't create the marine insurance product. That's Joe's job. I'm not an end user of that product. That's Molly. I don't bring the people together in the contract. I mean, that's what Chris does. I mean, I suppose I should say my perspective as a lawyer on marine insurance is it's really a good thing. I think every owner should have some. And then I should sit down, having made a very strong point that is incontrovertible. But Boriana will not take no for an answer. She says, wait a minute, Greg, you may be downstream where the stuff hits the diaper. But you work with the club and the member. You understand the relationship being created, the problems that they have, the goals that they have. You also have to make a choice of which one do you work for, who do you serve, which is very important in that tripartite relationship between insurer, insured, and lawyer. And what are some of the conflicts or problems that arise in being a P&I lawyer and dealing with clubs and members? Well, and she said, please try to take about 3 minutes.
I did not say that on the record.
4.
I said, take as much as you want.
Oh, and I'm up against lunch, Boriana. I'd like to first of all say that it is a relationship. It's not a transaction. When you go out into the insurance market and you buy automobile liability insurance, that's a transaction. You hope you never have to contact them or hear from them until it's time to place it again. If you look at just the words of P&I, it's club and member. It's something extremely different from insured and assured. It's not a transaction, it's a relationship. And you're in a community with other owners, and also, most importantly, you have that worldwide support that we have spoke about, that anywhere in the world, if you have a problem, you have an instant group that you can turn to with experience there that can help you. And the lawyer has to understand when he comes in, he's not being given a case. He's entering into a relationship, and he has a duty and an obligation to see that relationship works, because it's an important relationship both for the owner and for the club. They value each other, and the lawyer should not get in between it. He should work to make that a smooth running. The first thing you should do if you get a case is you have an owner and an underwriter, or an owner and P&I claims. They have the same rules for the club, but I've never seen the club and a member owner really have the same exact relationship. Your large member may have in-house capabilities for risk management, may have its own counsel, may have agents in ports around the world, and what it will call upon the club to do may be less than a smaller member who's unfamiliar with ports, unfamiliar with the laws in different areas, doesn't know which counsel to turn to, and really looks to the club to hold its hand. And the lawyer, the first thing you have to do is get a feel for how your client, the owner, actually relates to the club. And then what you have to do is get in sync with it and not be a cog in that relationship. The owner, the member, and the club ought have, at least from the lawyer's point of view, coming into a claim or case, they ought have they have a common goal. The club wants to keep down losses across the field. The owner wants to keep down his own loss records. And your goal as P&I counsel is to work with them to be in sync. It's a symbiotic relationship, is to make it a tripartite relationship and work to control loss and to do it in a cost-effective way. I was told as a young lawyer, you can approach a P&I problem and look to the club and look to the owner, the member, as a single undivided interest. You can regard them as if one client, as if. But of course, in the law, you never can stop with as if. You go on, who is the actual client? And it's created a lot of problems. In most insurance situations, you have a lawyer named by the carrier. His relationship is with the carrier pays him, the carrier controls the case, and the carrier will give him future business. So you ask in the average insurance situation, well, who's your client? Is it the carrier or the guy with the bent fender? And so there are all kinds of rules, and they make no exceptions for marine insurance, marine lawyers, although we have a much more genteel field. In most, the question I ask is they come up with a doctrine called the dual client doctrine. Dual client means they are both your client, both the member and the club, but the assured is favored. I'm not sure what that means. Doesn't answer the question. In New York and in the Second Circuit, you can only have one client. You cannot serve two masters. You must pick one, and the one that's picked for you is the member, the assured. However, and now we're going back to almost the dual client thing. However, remember, there's a duty of good faith toward the club. You must obey its rules. You must be honest, forthright, and you must respect always, even representing this member with undivided loyalties, you must respect the club's financial stake and its duty to other members with respect to your claim. Actually, between the dual client and the single client, I don't know that there's a lot of difference. As far as in New York, my experience goes, I don't see a lot of conflict between clubs and their members in the P&I setting. There's a number of reasons for it. First of all, we don't have all the issues in P&I insurance that you have in land-based insurance that get you into quarrels. But I think if I can give New York Counsel a pat on the back, it is a long-established bar, and it's respected by the courts. Counsel is pretty much trusted in New York by member and by club. And you find that counsel in New York is often appointed by the member or is introduced to the member by the club at some point. The relationship is not one of distrust. In land-based insurance, the remedy for most conflicts as they appear is to give the insured his own separate counsel. We don't have that problem, P&I in New York, because counsel are known, counsel respected, and known by both parties. I also think the relationship, and this is the part of the work of counsel, the relationship is very open. You have a joint control of the case often, or you have reporting, you have telephone conferences. Both the member and the club know what's going on. They're periodically informed, and the sort of mistrust and suspicion you get in other forms of insurance does not arise. And I think that you've had, I would say that's a good thing in terms of the cost and time of litigating malpractice, bad faith, and other types of, that you see onshore. We don't have that, and that's good, and I hope that always continues. I think, to borrow a phrase from Forrest Gump, that's all I have to say about that.
Thank you very much, Greg. And we have a minute for questions.
Here's a question.
It's maybe a slightly different topic, but I'm just curious from a point of view of the regulatory environment under which P&I clubs and marine insurers operate in the U.S. Are there any red flags out there changing possibilities? Dodd-Frank is under a microscope. I'm just curious because, in effect, both groups are financial institutions and licensed insurers.
Well, I might speak to that if I may, actually, Dick. We're at the American Club. We are subject to the regulation of the New York State Financial Services Department. It used to be the Insurance Department until Cuomo merged them together. The regulations are similar in some respects to the Solvency II regime that applies in the European Union, chiefly in relation to the calculation of capital adequacy. In New York State, it's done under what's known as a risk-based capital testing, and in Solvency II, it's rather similar, except you have different tiers of capitalization and so on. I don't see any particular red flags. I think that there will be a growing degree of conversion over time, convergence, I mean, over time, in terms of the regulations in Europe and those that apply in the United States. And, you know, as I say, they have certain similarities in regard to calculating capital adequacy at the moment. Certainly our experience of going through Solvency II in setting up American Hellenic was very enlightening. It's a very demanding regime, and it takes a lot of work to actually fulfill all the obligations that are set up under Solvency II. We are very proud of our relationship as the American Club with the local regulator here. It goes back to our foundation in 1917. We have a very cordial relationship with them. There are certain elements of that which I would suggest are fairly demanding too. I mean, quarterly reporting of your statutory results, the requirement that you have an actuarial certification of your loss outturns from year to year and so on. So I see no red flags, but I do see growing convergence between the regimes over time.
We have another question.
A ship owner who also charters in a lot of tonnage told me that he was thinking of chartering one or other of two ships. One ship was entered with an international group P&I club. The other ship was entered with a fixed price P&I club. What advice would you give him as to choice?
As between the two? Shall I answer that? Or, no, Chris, why don't you answer it?
I think it comes down to the trade of the vessel. You know, going back to the original point, you're getting the worldwide network with the international group feature. So if you're dealing with cargo operations in the Far East and Europe, you know, what's your comfort level as an insurance buyer to tuck that facility within, quote unquote, a fixed market facility who necessarily may not have the resources available? Having said that, there are charterist facilities out there specific to charter's liability that engage in bringing the buyer specific network of operations, but the best of the best that you're going to get is from the international group feature, and that's sort of that additional caveat is that we are a mutual entry for the owners, and we have this charter's liability facility as well to facilitate both sides of the fence. Joe, anything to add to that?
Well, I can't think I can add to that, actually. That was an admirable response, Chris. Thank you.
Thank you. Are there any other questions? Well, thank you very much to all the panelists and the audience. Thank you very much.